Hi guys, and welcome back to another episode of CryptoScoop FM. I'm your host and analyst and chief chef. That's how I like to call myself these days. And today I'm going to bring you a token that TradFi, quote unquote, TradFi, doesn't know about yet. Or, if you missed the crazy ETH rally, then I highly recommend that you watch this video very carefully. Pay attention to everything that I tell you because I'm going to reveal so much alpha in this video that you're going to be feeling so awesome. Alright guys, with that, let's dive in. Now, I know a lot of TradFi, no, not TradFi. A lot of TradFi are looking at crypto now, right? You have digital asset treasuries, you have Tom Lee, you already had Michael Saylor, but you have all sorts of folks now coming in trying to take advantage of this digital asset market explosion that we are seeing in front of us. And so I felt, where is the big opportunity? And I started digging through, and one protocol's name came in again and again and again. And honestly, I just didn't know if this was all just hype or there is some real fodder to this craziness, because social media, crypto Twitter, right? But I think I just dropped a hint about what this token is. But before I reveal the token, right, I want you to run a thought experiment, right? I want you to imagine a chain that is faster than Solana, a trading platform which is cheaper and more transparent than Binance, or for that matter, any other centralized exchange, Coinbase, Buyback, and a crypto product that is making over $5 million every single day. And that's not it, guys. They're not just making 5 million a day. They're spending 97% of their revenue to buy back that token. Yes. And so far, this thought experiment, if you thought was just fiction, it's not. It is reality. And the token, tada, is none other than hype, right? But before I dive into the story of Hyperliquid, how it came to be, what were the motivations of the founder, who is the team behind this, and I'll talk about all of that because it's important to know that. But I want to talk about the impact this project has had on crypto. And I want to start with this one chart, which shows the Hyperliquid price and their daily revenues. And you can see that in the month of July, they're making anywhere between $3 to $5 million, and in some cases they have their daily revenues. By the way, guys, this is their daily revenue. It has even exceeded $5 million. It's touched like $7 million a day. So if you annualize this number, it's close to almost $1 billion in a year. And think about it, like, because take a pause and internalize this number, because I can literally count on my fingertips. In my 4.5 years in crypto, I have not seen this kind of an outperformance from any project till date, period. Before I go further into the video, I want to say that nothing that I say here is financial advice, life advice, or legal advice. I'm just a guy sitting in his room making YouTube videos, so take everything that I say with a pinch of salt. Moving on, bridge deposits. Guys, $5.5 billion have been bridged on Hyperliquid until today. Crazy billions of dollars, right? And that's not it. Hyperliquid's monthly volumes on its platform is now close to $25 billion, guys. And if you look at this chart, it topped to $10 billion in December of last year. And then it began 2025 on a slower note, still doing about $5 billion in monthly volumes. But since May, that number has, it doubled from April to May to $10 billion plus. And then now it has now doubled again from May to August. So in a quarter, Hyperliquid is just like printing volumes, right? It's attracting traders, it's attracting deeper liquidity, it's attracting more and more users to its platform. But let's dive deeper into this number. Because if you break down Hyperliquid, there are two parts to this business, right? There's the perpetual futures market and there is the spot market. Let's look at each one of them. Now, so far since its launch, Hyperliquid was predominantly a perp dex, meaning it was a derivatives exchange. And if you look at their daily volumes on the perpetuals exchange, it has simply gone up and to the right. So if you look at the data from from the end of May until August, you can already see how this number has gone up almost twice, and in some cases gone past to $25 billion, guys. So that gives you a sense of how much volume is being generated through the perps market. But that's not it, right? Because for Hyperliquid to become a well-rounded TradFi trading platform, it has to offer all kinds of products. And so they launched the spot market in some time back, but it was nowhere close to the perps market. But you can see in August of 2024 there is a $3 billion volume. And just to explain this, we recently had that BTC dump, 25,000 plus BTC, and the platform which this rotation is happening from BTC to ETH is none other than Hyperliquid, guys. So $3 billion in spot volumes on a single day, $10 billion, from $1 billion 2 days before. But you can already see there is a growing pattern on the spot markets as well. In the perp landscape, there is no second best. Hyperliquid is just the clear winner. If you look at the data over the 7-day weekly, 30-day or a 90-day period, you can clearly see both in terms of market share or in terms of absolute volume, Hyperliquid is just dominating the market. Like, there is no number two, guys. That's what Hyperliquid is on the perp stage. But perps is great. How does this translate, right? And I kind of looked backwards as well on the evolution of the derivatives dexes in crypto. And you can see over on the left side of your screen, you have the top 10 share by overall volume since 2020, and you can see how DYDX was the predominant king of the hill, and only to see market share being eaten away slowly and steadily by Hyperliquid, to the point that Hyperliquid is now probably the only game in town, with a small market going to drifts, to orderly, and a bunch of others. But clearly there is no second best when it comes to Hyperliquid and its dominance in the perp dex landscape. But is that enough? Right? Is that enough? To what's next? Where do we stand against centralized exchanges? So I got this data point for you, and if you look at this data, you already see that we're doing around $200 billion of volume across perps on exchanges, and of that number, 8.1% market share is what Hyperliquid owns today. In comparison to other larger players like Buyback and OKX, and which have half the size of Binance, it's still pretty significant if you think about it, because for a competitor which is completely decentralized, fully on chain, to be able to command these numbers shows some very strong strength in Hyperliquid. And you can already see that Binance's line is starting to shrink in terms of its market share. It absolutely dominated, and now you have this new kid in the block trying to eat its lunch. And if I add not just the perps volume, but if I add the spot volume and also all of the volume that is generated through Hyper EVM, this number is 20.7 billion, guys. And so the market share increases from around 8% to close to 10%, right? That's almost half of Buyback now. Crazy numbers. That's not it, guys, because one part of it is, I'm the absolute dominant perp dex. I am competing with the largest centralized exchanges out there. But Hyperliquid is the third highest revenue generating protocol in Web3. Take a moment and pause. You have Ethereum, you have Solana, you have Tron, you have Arbitrum, right? You have all of these different products. You have Pump. But here is a chain which is quietly building up a base of users and sustainably growing its revenue to the point that the only two competitors in the market, and I won't call them competitors, but the only two other projects in the space which make more money than them is our stablecoin issuers, Tether and Circle, right? So it's incredible to see the performance of Hyperliquid in a very short span, of like $62 million in 30-day revenue. Absolutely fantastic, right? Okay, so now that we have some sense of the absolute beast that Hyperliquid is, let me walk you through their story, right? So this was founded in 2023 by a team of ex-market makers. They have very strong academic pedigree. Folks come from Harvard and MIT. The hype project, for you to truly understand it, you need to understand that it's not just a DEX, right? It's not just created for the sole. It's not an application created for the purposes of, just doing trading. It's an ecosystem. It's an ecosystem with an on-chain order book for perp and spot markets. It offers zero gas trades, and it has massive throughputs, like up to 200,000 orders in 1 second. That's massive, guys. Now, think about it, contextualize it, because for TradFi to come on chain, for net new markets to be built from scratch, ground up, you need scale, you need security. So, in short, it is a feature-packed L1. It's custom built for finance, and it solves this speed and cost issues that have been plaguing Ethereum for the longest time. And not just Ethereum, every other chain, maybe with the exception of Solana, which also kind of suffers from this. Hyperliquid has proven its mettle in the market against much more entrenched chains and players in the space, which is amazing, right? Now, under the hood of this on-chain finance behemoth lies a technical structure which kind of lays the foundation for what Hyperliquid is. So if I really break this down, there are three pillars or three parts to the Hyperliquid technical story. The first is the Hyper BFT consensus. Now, consensus algorithm is basically how a decentralized network of nodes communicate on what is the on how they achieve consensus on transactions in a given block. Basically, how do they figure out what is the central truth which is relevant for all of us, right? And without this, there is no blockchain. And so they use a custom algorithm which ensures they offer less than 1 second of block times with high security. Remember, guys, for a high speed on-chain limit order DEX, speed is extremely important. And the second most important component after speed, it's security. And this is what Hyper BFT consensus is designed to do. Now, the heart of this business, the heart of Hyperliquid, is the Hypercore. Hypercore. Now, what is Hypercore? Hypercore is basically their fully on-chain perp and spot order books. So every trade, every order, and every liquidation is transparently and within a single block finalized, and Hypercore supports over 100,000 orders in a sec with no gas. Imagine that, right? And then the newest addition to this technical block is Hyper EVM, which is the EVM compatible layer of smart contracts. And what this basically does is, this was launched earlier this year in February, and it enables the creation of DeFi Legos or DeFi applications to tap into Hyperliquid's deep liquidity. Right, so you can build things like yield vaults or lending protocols or trading bots, whatever. You can do many. It unlocks so many different use cases and expands broadly the scope and scale of the Hyperliquid platform. Now, in terms of their flagship offerings, right, there are three right now. There's the Perp Dex, which has over 100 pairs. It offers high leverage, deep liquidity, and a sex-like user interface. Imagine something like Binance, and that's what Hyperliquid offers, right? Spot trading has now been launched via HIP1, and they do Dutch auctions for new token takers. So basically, they've basically created this market which is decentralized, and anybody can just come in and via HIP1 do a Dutch auction to launch a new token. I think that's huge, guys, because centralized exchanges today take a bulk of supply, like sometimes 7 to 10% of a project supply, in order to make market for those tokens. And here is Hyperliquid. All you need is to bring in your token, decide your tokenomics, and do a Dutch auction, and bang on, there you are. It will be, mark my words, it's going to be much more cheaper and better both for the takers as well as the market makers. Now, vaults, similar to copy trading, right? HLP is their official vault, which acts as a counterparty, and it earns fees. It has a TVL of over $3 billion right now. So those are the products that Hyperliquid has right now. In terms of market expansion, they recently unleashed builder codes. And what are builder codes? It basically allows wallets like MetaMask, Phantom, and Phantom is actually integrated with builder codes or bots, trading bots like Axiom or Banana Gun and others, to basically integrate Hyperliquid's deep liquidity and perps market to earn up to 0.1% in fees. And already $25 million has been paid out already, right? And this boosts not only volumes on Hyperliquid, but it also grows protocol revenue without actually hurting the underlying expansion of the product itself. Now, another thing that they have recently launched is HIP3, which basically allows anybody to auction and list a custom perps market. And to do this, you need to stake 1 million hype tokens. So imagine, guys, every time you need to launch a new perps market, you need 1 million hype, and that 1 million hype has to be staked. And the more it is staked, the lesser it is in circulating supply as well. Now, this and this also, like, the market creator can keep up to 50% of the fees, and this is something which is going to come soon, and we'll see what the impact of HIP3 is going to be on the overall markets. So in summary, three components: Hypercore, it is the on-chain order book, up to 200,000 in transactions or orders per second, drives the predominant revenue for Hype buybacks today. You have Hyper EVM, which is the EVM compatible layer, and it burns tokens via DeFi activity, so further reducing the supply. And you have HIP3, the custom perps listing, which locks hype and expands the market share for Hyperliquid. So in all, you can see how each one of their components and their key features are tied to reducing or somehow managing the supply of hype tokens in the market. And, basic economics 101, guys, the price of a token is a function of demand and supply. If demand exists and supply keeps going down, you can do the math, right? Okay, so one cool thing that Hype did, right, was a huge community airdrop. Like at the time of launch, the Genesis distribution, they unlocked about 310 million tokens, which was airdropped to the community. And at that on that day, it was valued at approximately $1.6 billion. Now, imagine if none of the airdrop recipients, if they would have decided not to sell their tokens, the cumulative value today at current prices would be $14.3 billion, right? Like, wrap your head around this number. It's crazy, right? But it was, at the time, not the largest airdrop ever. In fact, Uniswap did distributed over $6.5 billion worth of tokens in 2020. It was the largest airdrop ever, and it is often cited as the largest airdrop in crypto's history, followed by ApeCoin and DYDX. Unfortunately, DYDX is pretty much obliterated by Hype. But the important thing is Steam unlocks are coming. $11 billion worth of unlocks at current prices are on the way. 237 million new tokens will be released linearly starting November 2025, right? So that's going to add some level of new supply to the market, and how this plays out in terms of token price would be something interesting to see. I mean, usually teams dump on retail, but I feel like in this instance they've been so strategic about their tokenomics. I feel like if what they're doing, and I'll talk about why I'm less worried about these token unlocks in a bit. But Hyperliquid's overall tokenomics is probably one of the best that I've seen in this space in a long, long time. And trust me, guys, I've been in this space for like over 4.5 years now. I know. So, what's happening? Why am I not concerned with these unlocks? Like, the first reason is hype buybacks. They have an assistance fund which is using 97% of the fees. And remember, I showed you the fees. They're making like close to $5 million every single day. So 97% of that capital, that revenue, is going back to buy hype in the market. And that's a perpetual demand that they have created for the hype token, right? That's reason number one. The absorption ratio, right? This is very important. It shows you, the higher the absorption ratio is, the more it is able to take the weight of the sell pressure of hype tokens, right? And is able to keep the price at a certain level. So you can see the assistance fund absorption ratio is currently close to or a little over 5%, which is pretty good, right? The stronger this number is, the better it is for hype. So even though there will be token unlocks, because their revenues are increasing, and I'll talk about the revenue projections in a bit, but because if the condition is if the revenue continues to increase, and they continue with their 97% buybacks, you will see a large portion of any sell pressure on the token being absorbed by the assistance fund. Not just that, right? They're also burning the hype token. So if you look at the last 90-day period, on average about 2,000 odd tokens are being burned every single day. And this burn happens because all the transaction fees that is generated is basically sent to a burn wallet, which is great, right? So you have the buyback through assistance fund, and you have the burns as well. One very interesting data point, like at current prices, if the assistant fund continues to keep buying tokens, right, and the burn keeps burning the hype token, how many years before the assistant fund is able to buy back all of the tokens which are available as ready for sale supply, marked as ready for sale supply? Guys, in less than 2 years, 1.5 years, they can buy back all of hype's ready to sale supply. The supply shock is real. Let that sink in. Right? Now comes something interesting, right? So what's the forecast like? How does, for all of this to play out, right? The foundations of this is hype continues to lead in terms of customer traction. It continues to grow its volumes. Consequently, it continues to grow its revenues. So in the current stage, they're doing, as you can see, close to $7 million in daily revenue. And if we project this out ahead based on the last 180 days as our historical period, and apply that growth rate, that's a 75% growth rate, guys. And so that takes us to a daily average revenue of anywhere between 4 million to 8 million, with a 6 million right at the average middle, right? So we're looking at almost doubling our revenue from our current points. So, strong forecasts again. That's not it, guys. You also have digital asset treasuries. So $700 million worth of hype will be purchased within the next 3 months by just 2 entities, right? You have the assistance fund that I showed you, which is on track to buy another $400 million worth of hype. I think they're close to acquiring almost 30 million hype, guys, which is worth at current prices approximately $1 billion or so. And then you have Bob Diamond, who has confirmed that he's raising $300 million in cash for his hype treasury, which will be used to buy the hype token. So you have a digital asset treasury in the Wall Street, which wants to buy hype, and then you have Hyperliquid's assistance fund, which is buying hype, right? All right, that was the fun part. Now let's talk about that was all the technical, analytical part. But now let's talk about the fun things, price prediction. We all love it, don't we? And so, what would be the price of ETH with the market cap of Link, Cardano, Doge, Tron, XRP, BNB, Solana, ETH, BTC, and all the other tokens? You can already see that hype has overtaken Polygon, it has overtaken Near Protocol, it has overtaken Aave, Thena, Polkadot, Uniswap, Hedera, Sui, Avalanche, Ton, Shiba Inu, Litecoin. It has already overtaken all of these projects, guys. And what's next? If you ask me, it's impossible to predict the price. That's what I believe. And I also believe that you don't need to predict the price to win in the markets. Having said that, I do feel if I'm pressed against the wall, then I think anywhere between BNB and XRP is where hype should land based on how they are killing it in the market. But as always, big caveat and a reality of the market that markets are irrational. So at no point in time can I really predict what's going to happen next. So keep that in mind, right? And speaking of crazy price predictions, Arthur Hayes has predicted that hype's potential market value could be $5 trillion, right? And that's a 126% upside from the current FDV of hype. So, I'm not the only one making crazy price predictions. All right. So we talked about the good. We talked about all things going really well for Hyperliquid. But, all heroes have a dark side, and so does Hyperliquid. So what are the dark side? What are the issues? And, when I was writing this down, I was also thinking if these are real risks, or, is there a way that they can, is there a way to categorize them like low, medium, and high? I think at this point, almost all of them are medium to high risks, and I'll tell you why. Right, the first major risk factor is regulatory and compliance risk. Right, Hyperliquid is a DEX, so technically no KYC, and so with that we can have almost any individual or citizens of any country participate on the DEX, and including countries which face American or United Nations sanctions. If that happens, then hype is probably maybe in violations of the OFAC regulations or rules. We did hear stories about North Korean hackers using Hyperliquid to basically funnel their illicit crypto hack money. So that's a real risk, guys. That's a real big risk. It also alienates institutions, because if institutions want to come in and use a platform, they are using money from accredited investors, and they need to make sure that they meet the compliance guardrails very strongly. And the absence of that could lead to a limitation in terms of how much would Hyperliquid be able to expand, right? The other big risk that I felt and is spoken a lot on Twitter is no decentralization, or minimalistic decentralization, with only 4 validators basically securing all the value of the chain. Now that's real risk, right? If the Nakamoto coefficient doesn't go up. So what basically they have done is they have compromised decentralization for scale and speed. A different choice from Ethereum, which prioritized decentralization, or Solana, which prioritized decentralization. So something to think about. And the last one is OPSEC, or operational security. Just for context, and this was unsubstantiated, put by Justin Bonds, who's a fellow crypto analyst as well, and he said that one hot wallet has all of the $3.4 billion of user funds, and it is protected by a 3x4 multisig without any disclosure on who are the keepers of the keys. Now and I know, having spent all of this time in crypto, not your keys, not your crypto, and bridge hacks or wallet compromise could lead to a massive risk, right? We've seen this happen before with other crypto exchanges as well, and nothing different here. If Hype is to really live up to its potential, I think they need to figure out a way to build more disclosure practices around especially user funds, right? Very, very important. Now, in 2025, Hyperliquid faced two near catastrophic Oracle exploits. There was a 6 million jelly exploit, followed by a 260 million notional impact on users due to the outage on an API issue with the protocol, because they were using a deprecated API of a service, and technically this was not an exploit, but still tells you that with scale comes these challenges of keeping the platform working and stable and structured. So big risks. Having said that, to conclude, Hype does have its flaws. It has the issues. It has these issues around KYC, around OFAC compliance, around disclosures, and then you also have Andre Cronje, the godfather of DeFi, and the creator of Yearn Finance, and previously Phantom Chain, which was rechristened and it got a rebirth in the name of Sonic Chain, who is now working on Flying Tulip, which is his own version of a compliant compliant perpetual DEX. So if they come in, this could finally mean competition, right? And finally, also, like, so far, it's very clear that that Binance is leading the market, but I think the movement is clear. And that movement is clear because you have many tailwinds all the way from regulatory clarity to global stablecoin expansion and other news that I think will act as strong undercurrents, not just for Hype, but pretty much for the entire DEX landscape. Right, so that was my presentation of Hype. I spoke a lot about various elements around Hype, but I want you to understand that the future of decentralized finance rests on our ability to innovate, secure, and build top-notch industry-grade solutions. And we need to think out of the box, because we're building the true ownable web, the true open finance. So Hype is definitely one of the strongest players in this space. You've already seen the numbers. You've seen what they're doing, what they're planning to do. So overall, a very, very strong outperformance rating is what I would give it. I have no specific targets on this project, because I don't know. I am not a soothsayer. There's no way to predict. But looking at the general, expansion of this market, the growth opportunities available, there's a long way to go, and it's very clear that Hype is in its early growth stages. So that's it, guys. That's it from me on today's episode. Did you like it, not like it, love it, hate it? In any case, drop your comments below. I'd love to hear from you. And also, guys, this is a new channel, so I would love all the support. So if you can smash that like button, and if you haven't subscribed as yet, please do subscribe as well. I work really hard to bring all of this deeply researched content for all of you. That's it from today's show. I'll see you again very, very soon. Until then, sayonara.